daily outlook into Wednesday, June 17th. This is obviously FOMC day. You can see the pre-day's range here with a down close candle back in the range. This is represented on a daily profile by the New York reversal profile. And overall at the moment the market is trading inside the range of the premium SIBI that it has inverted. The market has overall also created a daily fair value gap. Now honestly this is not the type of fair value gap that I would have expected, and so I do prefer this here rather than say this. Why? Because this is part of the uptrend here, and this includes the volume imbalance, the new day opening gap of Friday, the new week opening gap right of this week, plus an inefficiency right through it. Okay, so we're looking at the range here of a suspension block, and obviously these levels are cutting through the rejection block of a bullish order block. Okay, so the wick of a bullish order block. This was an old dealing range high here, if you remember from last week's profile. Tuesday had taken out the high and the low of the previous day, and then closed right back at 50% of the range. Okay, so overall you could still use the premium SIBI, okay, to frame either the weekly profile or lower time frame order flow. But since we've had a development here on the right side of this curve, I figure it would be better to use the levels that now the right side of the curve has created. Okay, so we have a discount array here. In my opinion, will likely be traded into tomorrow, right? Because of the fact that yesterday was a phase, well, in my opinion, is a phase of reaccumulation. We'll look at that on the lower time frames, and you can see so far the day has opened and hasn't yet created a wick under the daily low. Okay, so I believe that the daily low will most likely be formed around these levels, and from there, well, it's going to be important to see the closure of FOMC, right? Because the previous day here having been a New York reversal profile, right? So big down close candle back inside of the range. Well, what I'm trying to say is, for overall order flow, right, I do believe that this SIBI is maybe more relevant than the suspension block created at these levels. Why? Because if today we get a day that has a strong closure through the range, even if it were to respect the suspension block, I say through a closure such as this, okay, some kind of open high low close profile, but that sees a bearish closure, right? So with the trend, in my opinion, then the SIBI would become reclaimed, okay, and with the fact that Tuesday here was a New York reversal, if today were to continue this trend, right, then the market would invert the range, would reclaim the range of the premium SIBI, and so from there, in my opinion, we'll likely want to trade towards discount levels inside of the range. Okay, this can look like OTE here, right, the optimal trade entry, maybe trading back inside around 50% here of, you get a range of an order block. We can refine these levels on the lower time frame. But yeah, if the SIBI becomes reclaimed, okay, through a bearish closure today, then I believe that the drawn liquidity will be somewhere around 29,500 to 29,000 for the rest of the week. But overall, I still do prefer the open low high close delivery. Okay, a day where the market will create a low of day around the range of the suspension block and expand from there, or a day where the market will first revisit premium, trade to discount, but then doesn't have a strong bearish closure. Okay, likely, FOMC starts sending price back in the range, may consolidate, but overall leaves a wick on the daily candle. Okay, essentially what I'm trying to say is I don't want to see, if I'm biased bullish, a strong down close candle through the quadrants of the premium CIVI. Okay, so we're looking at a discount level at this range, and in premium, well, we'll still look at all-time highs, which in my opinion still is the draw on liquidity for the week, or at least for the month, right? For the monthly profile here, since we're on a daily chart. On the 4-hour chart, you can see that yesterday the market has reclaimed the range of a bearish order block, right? It had traded through it on Monday through a classic buy, eventually trades to its high, accumulates, tries to expand again, ends up creating a divergence here with the S&P 500, and then displaces through the range, right? So has created a fair value gap right through 50% of this premium order block. So I do believe that the market will want to revisit today the new week opening gap, and in my opinion ideally forms the low of week at these levels. But anyways, the idea is you obviously want to see how the market will trade inside of this fair value gap, and you also want to see how the market will trade around the range of the new week opening gap and this reclaimed BISI, okay, which is located right at 50% of the range from the 3-week look back. Okay, so these levels remain important in my opinion, and these levels can offer trading opportunities intraday. Now, I prefer using, well, all depends on the context obviously. I typically tend to prefer levels from the previous day's range intraday, but I mean, if we just out of curiosity and we go look at this on a lower time frame chart, right, you can see how the market uses, right, so you can see Monday here use the quadrants of the bearish premium order block as a breaker, right? Every time it trades around the quadrants, use it as reaccumulation, right, and distributes from there. And yesterday did the opposite, right? It starts trading back inside of the range, and uses the quadrants here of the range of the premium order block as reaccumulation to distribute towards discount. Okay, so these levels are still useful on the lower time frames. Okay, so we're looking at the range of a 4-hour fair value gap as a premium array through the range of the premium order block. And in discount, I'm paying attention to the range of the reclaimed BISI at the range, inside of the range, and overall the range of the new week opening gap. Again, just like I said on the daily, right? Especially this fair value gap, which has proved to been very sensitive, right? Even here, say, what I wouldn't want to see is a big down close candle through this range, right? Ideally, I would like to see some kind of wicks left behind if price will trade lower. Okay, as in my opinion, the draw on liquidity remains all-time high plus more. On the 3-day look back, well, first of all, we can look at the previous day's range, right, which was what? Which was a New York reversal here. Okay, price from the previous day was a classic buy, okay, so an expansion phase. We analyzed what it left at 75%, at 50%, and at 25%. And we said that the market here had closed bullish, right? Why? Because the market had expanded and then closed as a consolidation phase. So we were anticipating a new high to be made. If not, right, for the market to revisit first 50% and then trade towards all-time highs. Okay, so here the market does expand higher from 25% of the previous day's range, but then ends up failing, right? Ends up creating a divergence above the previous day's high, followed by a reversal here. Okay, it can be identified through the 8 a.m. 1 hour candle delivered as a classic sell, creating a fair value gap, creating a bearish order block, creating a bearish breaker. Okay, so a lot of confluence here around these levels going inside the opening range. Right, and what you can see is that, right, since here essentially, in my opinion here, the profile of day was confirmed as a New York reversal, okay, because price made a divergence at the previous high and then broke the structure. Right, what you can do is anticipate that the bullish levels from the previous day will be used as reaccumulation to distribute towards discount, right, because that's the idea overall of the daily profile. I mean, we can maybe look at this quickly on a 5-minute chart, and you can see that, right, it's pretty accurate how price comes back to, 25-50% of these levels, reaccumulates, and then drops lower. Trades to 25%, reaccumulates, 50% reaccumulates, 25% reaccumulates, 50% reaccumulates, right? So we can do the same now for the new day, right? Going inside of Wednesday, analyzing the previous day's range. But first of all, I want to look at the range of the 3-day look back, and I find this range important, right? So this is from the range of Friday up to the previous day's high. And I find this range important because we're opening near 50% of this range. Okay, and looking at the quadrants of this range, we can find key levels of interest going in, right, where we can frame the potential high or low of day of the previous range. Right, so you can see that at 75% of the range, right, you get the range here of. You get the range here of a bullish order block. At 50% of the range, you have a fair value gap. And at 75% of the range, you have this, right? You have the 4-hour fair value gap that was created from the reversal of yesterday. So you can put up those levels. For the sake of the video, well, okay. I thought it was going to be a bit more messy than this since these levels are pretty close. Okay, so overall for me, 3-day look back perspective, we're looking for, right, prices inside of a dealing range here. The dealing range is what? Friday at the lows had a shakeout, yesterday at the highs had a shakeout, and we're we opened right near 50% of this range. Okay, so we see that in premium there's a fair value gap. At 50% there's a new week opening gap, right, and overall a fair value gap. And in discount we have the range of a bullish order block. Okay, now let me remove these levels for now and we can analyze the previous day's range. So if we analyze the previous day's range here, all right, so what do we find at 25% of the range? In my opinion, right, the range is pretty tight here. There's a couple order blocks, but I do have to say I do prefer the range here of the mitigation block, right? Price went whatever, lower, higher, lower, higher, lower, right? And so far is looking to trade high inside of the range. So I do believe that this level can be sensitive. Okay, so I'm going to be marking out this level. At 50% of the range, you can see a clear order block. Right, and at 75% of the range, again, there's a couple order blocks. The range is pretty tight. There's a fair value gap. And honestly, I do think this is the level of importance, the fair value gap. Why? Because it cuts through a breaker. Right, it also cuts through a mitigation block. The breaker here, in my opinion, being the open of the day. Price accumulated orders inside of the range and eventually distributed out of it, but then broke, right? And you can see that this fair value gap cuts right through the range of not only the breaker, but again, the mitigation block of 930. Overall, though, right, both the levels here, the order block at 50% and the fair value gap at 75% of the range, right, you can simply put up the range of of the 4-hour fair value gap. Right, and obviously the range here is much bigger, but right, you can see that even if we just look at the range here of the fair value gap, the 4-hour fair value gap, right, we still have that same order block right at 50% of it. We have the range here of a bearish order block at 75% of it. We have at the high of it the fair value gap of interest from the previous day. Okay, so instead of having, say, in this case, in this scenario, these two levels up, since we have a more obvious, sorry, I have to cut the video for a second. What I was saying is, since we have a very obvious fair value gap located inside of this range, right? Again, that fair value gap is located exactly at 50% of the previous day's range. But I do think that this can be enough, to not confuse yourself, because since we're trading at 50% of a range here, right, not only do you need to highlight what's inside of premium, but you also need to highlight what's inside of discount. Well, let's go back on the hourly, and what I'm trying to say is, I do think it's better keeping only one level instead of having 3 different levels, since it can get confusing, right? Then at that point you're starting to have too many lines, too much stuff on your chart. So I think it's best to keep it simple, right? What do we have in premium? We have the range of a 4-hour fair value gap. This 4-hour fair value gap cuts right through, well, is located right at 50% of the previous range. Okay, and located in premium of the 3-day look back. At 50%, at 50% of the 3-day look back, right? So now we're looking at what's inside of discount of the range. Sorry, we have this here. We have the range of a 1-hour fair value gap, again located right at 50% here of the range. So far, the market has created the low of day at the high of this fair value gap, but I do believe it's very likely we'll trade lower, right, at least into 50% of it to fill a portion of the new week opening gap, if not more. Okay, such as the low of it, right? So closing the new week opening gap. Right, so 75%, 50%, and in discount we have the range of the order block itself, right? So the order block of the dealing range low. Okay, so I think that these 3 levels should be enough to frame the daily profile. You obviously want to pay attention which one is traded first. Okay, is it the premium fair value gap that's traded first, or is it the discount fair value gap that's traded first? And obviously, what's the reaction out of them, right? At what time of day does price trade into them, and what's the reaction? Any divergences or fair value gaps out of the premium SIBI, any divergences or bullish fair value gaps created out of the BISI at 50%, or displacement through the BISI at 50% to revisit discount, right? To revisit OTE here, where resides the order block of the dealing range low from the last 3 days. Okay, so quick recap. The previous day here came back inside of the range. We're now trying to determine if this range, right, because overall the market on Monday was an expansion and yesterday was a reversal. So price comes from expansion to expansion. But overall, the higher time frame trend, right, the order flow is still bullish. And so what we're trying to determine today is, following this lower time frame reversal, is this lower time frame reversal actually the start of a higher time frame reversal, or is this lower time frame reversal simply a phase of reaccumulation, right, identified, say, as a higher time frame retracement, lower time frame reversal, higher time frame retracement? Well, to be able to determine that, it is very important to see how the range will use the quadrants of the suspension block on the daily, But most importantly, especially for, say, the weekly or the monthly profile, right, how the market will treat and close around the levels of the premium SIBI. Okay, if you get a strong closure at these levels, in my opinion, very likely price will want to revisit some form of discount as this premium SIBI would become reclaimed. Okay. On the 4-hour chart, we looked at the current weekly range, right, and how it's been trading so far around the levels, some levels of importance from the 3-week look back. We saw that Monday expanded through the range of the pre-em order block, but was then unable to expand to its high. Right, look at the bodies here. Once it starts trading to the highs, it simply starts wicking the range, and yesterday has reclaimed this pre-em order block. Okay, in fact, has created a fair value gap right through 50% of this pre-em order block, and so we're now trading back inside of a range. Obviously, from a 4-hour chart, we're looking at this range low to this range high, right, being the previous high, and you know, around 50% of this range we can find the new week opening gap and a reclaimed fair value gap, what is currently a reclaimed fair value gap as price gapped up into it. So it will be very important to see if price trades around these levels, right? What does it do? Does it displace the levels, or does it respect them and then start creating fair value gaps / order blocks out of it? Okay, so I do believe this is a very, very important level for the weekly profile. If the market will displace this level, I do believe we will likely come back to the order block and discount. If the market holds these levels, then all-time highs is the drawn liquidity plus more, right? We can use the standard deviations here. We said that the range from, you know, 31,500 up to 32,000 can be an objective for the week, right? And what happened yesterday, we were kind of anticipating, right? Why were we anticipating this? Well, because of where we were inside of the standard deviations. Okay, we were anticipating a phase of reaccumulation going into FOMC as the day of Monday was an expansion. Now, I believed that it was going to be this. I believed it was going to be a consolidation day, but the market has created a lower time frame reversal. But a lower time frame reversal, when the order flow, right, overall on the 4-hour chart, on the daily chart is bullish, doesn't necessarily mean that this will lead to a higher time frame reversal. Okay, this can simply mean that the market is in a phase of retracement. And if it is in a phase of retracement, well, we know that retracements are directly correlated with fair value gaps. Okay, so that's why I'm saying the fair value gap here that includes the new week opening gap and overall the range of the reclaimed fair value gap from 3 weeks ago at 50% of the dealing range that we're in will be very important to gauge order flow. And on the 3-day look back / the pre-days look, the pre-days range, we saw that the pre-days range was a reversal profile here, right? New York reversal profile. So the market traded from expansion to expansion. Obviously, we know that expansion profiles tend to leave, you know, key fair value gaps, key rejection blocks, key order blocks around the quadrants of the range, and what we can find in premium, okay, or in premium of the 3-day look back, or at 50% of the pre-days range is the range of a 4-hour fair value gap. Okay, look, you could refine the fair value gap back to, say, this order block that's located at 50% of the pre-days range, or, you know, the mitigation block, the order block located at 25%. But again, I find that then you start having too many levels on your chart, and so I would rather keep one big level than have too many small ones, because of the context that we're in. Okay, again, and the context being that we're opening at 50% of a dealing range. Now, yesterday, right, I was using 3 levels. I was using the levels at 25%, 50%, and 75%, but this is because the market opened in premium. Right, open in premium not only of the pre-days range, but also of what was the 3-day look back range. right? So at that point in time, if I'm trying to analyze discount levels and the market is opening in premium, it's just very unlikely that it's going to come back, say, to whatever the PD rate was here at 50% of the 3-day look back. Okay, so all depends on the context. In this context, price is at 50% of a range. Okay, so I have to analyze what's in premium, what's in discount. We looked at what's in premium, the fair value, 4-hour fair value gap. We looked at what's at 50% of the range, okay, which is the fair value gap plus new week opening gap. And if not in discount, we have the order block of the dealing range low. Okay, so these levels should help you find not only the low or the high of the day, but should help you gauge order flow and find trading opportunities.